Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 5 strong buy dividend stocks for December. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. The month of December has arrived, so it is time to look at 5 stocks that all have ex-dividend dates coming up this month. The ex-dividend date is when you must own a stock buy in order to be eligible for that next dividend payment. So with them having ex-dividend dates in December, that means you're not going to have to wait long to start collecting that passive dividend income. We found today's stocks using the TipRanks Dividend Calendar. Found at the bottom of the dividend menu with the dividend calendar, you can sort throughout every week and see which stocks have dividend dates coming up. You can then narrow it down by analyst consensus, so we looked for a strong buy, and other factors like market cap, sector, and exchange names. So today we're going to take a look at these dividend paying stocks, what it is that they do, and what Wall Street analysts are predicting for the stock's future. Just before we get into those, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you subscribe to the channel as well. Now let's dive right into our December dividend stocks. First on the list is Hancock Whitney. They trade under the ticker HWC, currently priced just above $60 per share. Year to date, the stock has climbed 25%, and in the last 3 months is up 12.5%. Hancock Whitney is a financial services company offering a range of products and services. They operate bank offices and financial centers in Mississippi, Alabama, Florida, Louisiana, and Texas, offering comprehensive financial products and services including traditional and online banking, commercial and small business banking, private banking, trust and investment services, and mortgage services. They have been paying out dividends since 1991, and their ex-dividend date is coming up soon on December 5th. Their current quarterly dividend is 40 cents per share for a yield of 2.32% and a healthy payout ratio at just 27%. With that ex-dividend date on the 5th, payment date will be on December 16th. They shared their most recent quarterly earnings report on October 15th, where they came out with both an earnings and revenue beat. For their third quarter, they reported earnings per share of $1.33, beating expectations by 3 cents per share. Revenue came in at $367 million, beating by about $500,000. Net income came in at $115.6 million, which was up about $1 million compared to the prior quarter. The stock currently has 5 analyst ratings and does come in as a strong buy based on 4 buys and 1 hold. And the average price target of $61 implies an upside potential just shy of 3%. Looking at those ratings down below, on the low end we do have our 1 hold from back in September that has a downside of over 5%, while our high-end price target is more recent here from D.A. Davidson at $65 for an upside of 9.5%. For our second dividend stock, we're sticking to the financial industry with Bank of America. They trade under the ticker BAC, currently priced at $47.55. Their stock has climbed 43% year to date, and in the last 3 months has gained 17.5%. Bank of America is one of the United States' leading financial institutions, serving individual consumers, small and middle market businesses, and large corporations with a full range of banking, investing, asset management, and other financial products and services. They serve approximately 69 million consumer and small business clients with approximately 3,700 retail finance centers and approximately 15,000 ATMs. While they serve clients throughout the United States, they also have a presence in more than 35 countries. Bank of America has a long history of paying dividends and used to be a dividend aristocrat until they had to cut their dividend amidst the 2008 financial crisis. But ever since then, they have been paying and increasing that dividend steadily. They have an ex-dividend date of December 6th for payment on December 27th, and their current quarterly dividend comes in at about 26 cents per share for a dividend yield of 2.05% and a payout ratio of 35.5%. And they also shared their third quarter earnings report on October 15th, coming out with an earnings and revenue beat. They reported Q3 earnings per share of 81 cents, beating analyst expectations by 5 cents per share, and revenue came in at $25.3 billion, beating by $70 million. Their stock has 17 current analyst ratings, coming in as a strong buy with 15 buys and 2 holds. And the average price target of $48.67 implies an upside potential of about 2.5%. But when we look at some of those more recent ratings, we have some double-digit upside potential, including our high-end price target of $57 from Oppenheimer for an upside of nearly 20%. Our low-end price target is a bit older here, back in October, with a downside of nearly 14%. For our third dividend stock, we're taking a look at Wyndham Hotels and Resorts. They trade under the ticker WH, currently priced at $98 per share. Overall, year to date, they're up about 24% and have climbed 26% in the last 3 months. Wyndham is one of the world's largest and most diverse hotel companies, encompassing more than 9,000 hotels across 24 brands in 95 countries. Their portfolio includes a wide range of properties with comfortable accommodations and modern amenities to suit the needs of every traveler. Welcoming nearly 140 million guests annually worldwide, some of their big brand names include Wyndham Grand, Howard Johnson, Travelodge, Microtel, La Quinta, Esplendor, Wingate, and Hawthorne Suites. Wyndham just started paying out a dividend back in 2018, and their current quarterly dividend sits at about 38 cents per share for a dividend yield of 1.5% and a payout ratio of 35%. Their ex-dividend date is mid-month on December 13th for payment on December 27th. They did have mixed results for their third quarter that came out on October 23rd with an earnings beat but a slight miss on revenue. However, the company did have some other quarterly highlights. For their Q3, they reported earnings per share of $1.39, beating estimates by 1 cent per share, while revenue of $396 million did miss by just over $12 million. The company did raise their full-year earnings per share outlook and reaffirmed their 3-year adjusted EBITDA compound annual growth rate outlook as well. They saw high margins and significant free cash flow and had a record pipeline of about 248,000 rooms. With 8 current analyst ratings, Wyndham Hotels comes in as a unanimous strong buy. And the average price target of $103 implies an upside potential of about 5%. Looking at those price targets down below, on the low end we do have one from back in September with a slight downside of 2%, while our high-end price target is here in November from Oppenheimer at $115 for an upside of over 17%. Fourth on the list, we have 6th Street Specialty Lending. They trade under the ticker TSLX, currently priced at $21.48. Year to date, the stock has gained 7%. In the last 3 months is up 3.5%. 6th Street is a specialty finance company focused on lending to middle market companies. They provide credit and financing to small and mid-sized enterprises that don't always have access to the traditional banking sector. Their role in the credit system is to help support the smaller businesses that have long been drivers of U.S. economic activity. From their start back in July of 2011 up till today, they've originated approximately $26 billion in total loans. The portfolio is diversified and aims for low volatility. 6th Street pays out a base quarterly dividend, but then also a quarterly variable supplemental dividend on top of that, which makes for an attractive high dividend yield. Their base dividend is 5 cents per share, while their supplemental dividend is 46 cents per share, for a dividend yield of about 8.7%. Their ex-dividend date is December 16th for payment on December 31st. They shared their latest quarterly report on November 5th, where results were in line with expectations. Their Q3 earnings per share came in at 57 cents, which was in line with expectations, while their total investment income came in at $119.2 million, up about $5 million from the prior year. With 7 current analyst ratings, 6th Street is another unanimous strong buy, and their average price target of $22.14 implies an upside potential of 3%. Looking at some of those recent ratings, we have a few on our high end of $23 for an upside of over 7%, while on the low end we have a couple at $21 for a slight downside of 2%. If you've made it all the way to our 5th stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at Corebridge Financial. They trade under the ticker CRBG, currently priced at $32.37. Year to date, their stock has climbed 53%, and in the last 3 months is up over 13%. Corebridge Financial provides retirement solutions and insurance products across the United States. They were formed back in 2022 when AIG spun off the company via an IPO. They are now one of the largest providers of retirement solutions and insurance products in the U.S. They provide annuities, life insurance, retirement planning, and asset management. And since their spinoff in 2022, they have been consistently paying out a quarterly dividend. And their current quarterly dividend is 23 cents per share for a dividend yield of 2.84% and a very low payout ratio below 20%. Their ex-dividend date is December 17th for payment on December 31st. They shared their Q3 earnings report on November 5th, where they did come out with an earnings beat but a revenue miss. They reported a Q3 earnings per share of $1.38, beating analyst expectations by 21 cents per share, while revenue of $4.53 billion did fall about $1.14 billion short, though it did grow 11% year over year. The company did have a net loss of $1.2 billion, which was largely a result of some realized losses. With 9 current analyst ratings, Corebridge does come in as a strong buy with 7 buy ratings and 2 holds. And the average price target at $36 implies an upside potential of over 13%. Looking at those ratings down below, on the low end, we do have a buy rating at $34 for an upside potential of 5%, while our high-end price target comes from Jefferies at $42 for an upside of nearly 30%. So that is a quick look at 5 dividend stocks, all rated a strong buy and all with an ex-dividend date in the month of December. Let me know your thoughts on these companies in the comments down below and which stock catches your eye the most. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.